Kelly, I like this one for a variety of reasons. Definitely the cybersecurity area, it can be incredibly volatile, right? But that can also be a good thing when you're looking for trades, especially shorter term trades. Now, when you look at Datadog in particular, it has done fantastic the past 4 quarters in a row. I mean, we've seen this ticker trade higher between 10 and 16% overnight on earnings. So when that occurs, generally what you're going to see is in about the 21-day time frame, 21 trading days prior to earnings, we're going to see a stock start to rally in anticipation in another positive report. So I like to get in prior to the report, ride the rally higher, and typically I get out before earnings because I'm just trading the momentum into the report.
Right. A lot of these are kind of short-term plays. So Datadog becomes the first one for you?
Yes.
And just to quickly follow up on that, chip name or cloud name, I should say, IT services and so forth. Is there anything you kind of, other than a strong earnings report that tells you, or any levels here that would tell you, that it's a green light for the stock?
So, I do like the technical pattern on this chart. On a daily chart right now, we're sitting up above the 200 simple, which is really my key line in the sand when I want to be bullish on any stock, especially in this market environment. So when you look at Datadog, it's sitting up above the $125 price point. With this trade, I would like to get in right around current prices with a stop around 145, and I would be targeting 160 to 170 on the upside. So even though this is a volatile segment of the market, I still think that the risk reward is great, and about 3 weeks on the trade gives me plenty of time.
All right, let's move along to some energy plays because this one's been such a talker this year. One old school, one new school. The newer name is Enphase, the solar play. The shares are up about 11% this year. Why this name?
So this one has a similar pattern as well to Datadog. When you are looking at the way that this company has reported over the past couple quarters, the last 2 quarters, we traded higher by 18% and 23% overnight. And so what that shows is that this company has really been picking up steam. Yes, again, another volatile sector, but when I'm looking at short-term trades like this, I do want something that's going to move, because if there's not going to be a positive anticipation of the report, what's the point, right? So when I'm looking at this ticker, I love how it's sitting again up above the 200 simple on the daily chart. We've got earnings coming up soon. We're sitting above the $200 price point. And I'm targeting about 220 on it because this stock will normally move about 6% during this time frame.
And Danielle, that kind of makes me wonder, the setup going into this earnings season is so different from the last couple because the market was so deeply negative for the first couple of months. How does that change the hot zone or anything that you're kind of watching here in terms of sentiment and positioning?
Oh, it absolutely changes it. What I saw last quarter was that the amount of stocks that rallied into earnings was significantly lower than what we've seen really for the past several years. So what you want to do is you want to be focusing on those companies that have actually been able to produce fantastic reports in this market environment. And those are pretty few and far between. So when I look at Enphase in particular, and I look at the way that it traded last quarter, I mean, it was down on the lows even a week or two before earnings, and it still rallied the week before going into the earnings report. So if something can pick up steam like that, even in the market environment we're in, that's something that I want to focus on.
That's interesting because you're saying that in that earnings season was kind of a warning for how the markets overall traded in the ensuing couple months, and that there were names then that you're sticking with the winners there. It's not like you're saying, hey, these names were down big last time. This time I think it's going to be the opposite.
No, I mean, honestly, last earnings quarter, it was just destructive in so many ways. And actually, what I started looking for last quarter and what I've been looking for this quarter are companies that did get destroyed on earnings, and I'm looking for those to continue to go further. So on one hand, there are some shining stars where we can look for that bullish momentum, but there's also a ton of stocks that I think are going to fall even further on more disappointment.
Wow. All right. That's quite a warning. Before we get to your bail, though, let's talk about one more stock that also in the energy space, more of the old school play. You like Exxon here. It's already up 35% this year, but you think there's more room to run?
So I do like Exxon here, and the reason for that is because when I'm looking for this setup going into earnings, I like to focus on the strong sectors of the market, because when you have that wind at your back, that can really help carry the trades forward. And so while Exxon is already up, it has pulled back in the last 2 weeks or so, and it's sitting above a key area of support, about the $80 price point. You have crude that obviously, despite what President Biden is trying to do, very strong with crude prices. Energy segment is strong. And with Exxon, I'm just looking at this as a smaller trade. I'm not buying shares at this level, but I do like just getting into the trade at current prices and trading it up into about 85 to 88 with a stop below 80. So for me, that's a great risk reward for, something that's going to last about 3 weeks.
Fair enough. I take your caveats about, it may not be for everybody. All right, finally, let's get to your bail today. I'll just go ahead and reveal. It's up 5% this week, so, it's got some traction. But Uber down 15% this year, and 35%, it continues to languish way below its IPO price.
So, Kelly, I love looking for short candidates when they're up, and that's exactly why I picked Uber. When you look at Uber, the downtrend is, been in a downtrend for quite a while, right? But the thing that I love the most about it is the hot zone statistics. So when you look at the course of the last year on Uber, Uber falls on average about 10% during the hot zone. And so when I'm looking at that, I also see the fact that it did rally. That gives me a great entry point. I just don't see any positive anticipation for this report. They haven't done well on earnings. They have so many headwinds. You have new legislation, you have gas prices, you have the fact that they have increased their prices and their products have gone down in value, I personally think. But I just think there's way too many headwinds for Uber, and I think it's a great short here going into earnings, because I just don't think that anyone can possibly anticipate a positive report for them. So I think it's a great short-term trade.
All right, there.